Say your name, spell it for me, tell me what you do.
Elon Musk, ELON-MUSK, Chief Executive Officer of Space Exploration Technologies, or SpaceX.
And liftoff. Go Falcon, go Bluebird.
This is one of the biggest liquidity events ever. The SpaceX IPO likely creating the world's first trillionaire, we know that, but several new billionaires and countless millionaires.
Share price slumping some 16% in a single day. Now, why is this happening? This was so hotly anticipated.
For over a decade, investors have been waiting for this exact moment, the day SpaceX finally became a public company. Unlike most technology companies, SpaceX wasn't just another fast-growing startup looking to raise some money. By the time it announced its IPO, it has already become the dominant force in the commercial space. It was responsible for the majority of orbital launches in the United States. Its Falcon rockets had revolutionized the economy of space travel through reusable rocket technology. Starlink had become the largest satellite internet provider on Earth, generating billions in recurring subscriptions revenue every year. And like many trillion-dollar companies, SpaceX wasn't relying on a single business. It had multiple high-growth revenue streams, such as launch services, governmental contracts, NASA partnerships, military programs, Starlink, Starship, and future ambitions that include the artificial intelligence infrastructure in orbit and eventually the colonization of Mars. To many investors, SpaceX wasn't simply a rocket company. It was viewed as the infrastructure company for the humanity's future in space. And that belief pushed the company to an IPO valuation of roughly $1.77 trillion, making it the largest public listing company in history and raising approximately $75 billion in fresh capital. Wall Street wasn't buying today's earnings, they were buying tomorrow's possibilities. SpaceX was valued at almost 50 times expected annual revenue, a multiple usually reserved for a company expected to dominate the entire industries for decades. Investors believe Starlink alone could potentially become the world's largest internet provider. Many analysts projected that the future of satellites, broadband, defense contracts, AI infrastructure, autonomous logistics, and lunar missions could generate hundreds of billions of dollars in annual revenue over the coming decades. Essentially, investors were pricing SpaceX not for what it is right now, but for what they believed it would become. And when expectations become high, perfection becomes the minimum requirement. Elon Musk also becomes the first trillionaire. The IPO instantly rewrote financial history. Because Elon Musk still owns roughly 42% of the company, the surge in SpaceX share price briefly pushed his personal net worth beyond $1 trillion, making him the first trillionaire in history. It wasn't because SpaceX suddenly built more rockets overnight. It was because financial markets collectively decided that the future value of this company had increased by hundreds of billions of dollars in just a few trading sessions. On paper, no individual had ever accumulated wealth at this scale. And then the market changed his mind. But stock market don't price certainty, they price expectations. Within days, investors began asking difficult questions. Was SpaceX really worth more than the combined value of the entire industries? Could future growth realistically justify a valuation approaching $2 trillion? Would revenue eventually catch up with the investors' optimism? As those questions spread through the market, early buyers started taking profits. Momentum traders rushed for the exits. Institutional investors reduced their exposure. The selling then accelerated. The shares fell from an intraday high of around 225 to the near IPO level within weeks, wiping out hundreds of billions of dollars in market value. Now, the real damage, this is where the story becomes extraordinary. When people heard that the company lost hundreds of billions, they often imagined the money physically disappeared. That's not what happened. Market value is calculated by multiplying the share price by the total number of shares outstanding. So when SpaceX fell from its peak valuation of almost $3 trillion to around $2 trillion, nearly $1 trillion market capitalization was erased. This wasn't cash leaving SpaceX's bank account. It was investors collectively deciding that the company was worth $1 trillion less than they believed just days earlier. For perspective, $1 trillion is larger than the annual GDP of most countries on Earth. The value erased during the correction exceeded the total market value of companies like Walmart, JP Morgan Chase, or Visa. Very few events in financial history have destroyed paper wealth on that scale over such a short period. So what can we actually learn from SpaceX IPO? It wasn't a story about a bad company, it wasn't a story about a failed business, and it certainly wasn't the end of SpaceX. Instead, it became one of the greatest examples of how financial markets operate. Markets don't just value companies based on what they are today, they value them based on what investors believe they could become tomorrow. When expectations become too optimistic, prices can rise far beyond what fundamentals justify. And when reality fails to match those expectations, the market doesn't just adjust, it can correct with incredible speed. The SpaceX IPO IPO reminds investors of a lesson that has repeated itself throughout history, from a dot-com bubble to the electric vehicle boom and the AI revolution. Even the world's greatest company can become poor investments if you pay too much for them. As Warren Buffett famously said, price is what you pay, value is what you get. Whether SpaceX ultimately becomes the most valuable company in history remains to be seen. The technology, the vision, and the long-term potential are undeniable. But the events following the June 12, 2026 prove that no company, not even one led by the world's first trillionaire, is immune to the laws of the market. The biggest fortunes are often made by staying patient, ignoring the hype, and investing based on value rather than emotion. Because in the end, markets don't reward excitement, they reward discipline. If you enjoyed this breakdown and you want more deep dives into the biggest events shaping the financial world, make sure to like the video, subscribe to the channel, and let me know in the comments what story you'd like me to cover next. Thanks for watching, and I'll see you in the next one.